Hello everyone, welcome to EduTap and welcome to the Finance 360-degree session. In today's session, we are going to discuss two very important news articles. The first one is regarding the SEBI, the Securities and Exchange Board of India has included the Green Credit Program under the BRSR framework. So, as you know that the sovereign green bonds, the green finance, these all things they can be used in your descriptive answer writing if a question comes on the sustainable development or the climate change and such, and the actions taken by the government or the actions taken by the regulatory authorities. Similarly, now this green credit program, it becomes very important from your descriptive answer writing because you can use this for your answers. Okay. So, and from the objective point of view also, this topic is very important from the RBI examination perspective, from the SEBI and from the NABARD perspective. Okay. So, we will discuss that what are the green credit program, and this is very important from your descriptive and objective point of view. The second news article is regarding the RBI has maintained the FPI investment cap in government securities, in the corporate bonds and such. So, we will discuss the FPI investment limits that have been released for the financial year 2025-26, and remember that a question has come from the investment limits in the previous examinations of the RBI Grade B, so this becomes important. Okay, so the first news article, this is important from the descriptive and objective point of view, as well as the second news article, this is important from the objective point of view. Okay, so both of these we are going to discuss in today's session. Give me a thumbs up if everything is clearly audible and visible and the brightness and everything is absolutely fine. Okay. Now, before moving forward, before starting with these two very important topics, do subscribe to the YouTube channel of EduTap. So, do subscribe to the YouTube channel of EduTap and do join our Telegram channel where you will get the PDF of the session, and the link for the Telegram channel is provided in the description box below. So, usually the PDF is uploaded within 24 hours, but as today there is holiday for the team, so the Saturday, this is the first Saturday, so it is holiday for the team, and that's why the PDF will be uploaded by Monday, I think, okay, when the team starts working again. So this is the Telegram channel where you will get the PDF, and the link for the Telegram channel is provided in the description box below. Usually the PDFs you get within 24 hours, but for today's PDF it will be provided to you by Monday because the team will be working on Monday. Okay. Now let's start with the first news article, and the first news article is regarding that the SEBI has included the Green Credit Program under the BRSR framework. So, Capital Market Regulator, Securities and Exchange Board of India has decided to include the disclosure regarding the green credit program by listed companies. So it has been said that the listed companies will have to do the disclosure of the green credit program under the business responsibility and sustainability reporting framework. So under this framework there will be the disclosures that the listed companies will have to make for the green credit program. So what is this framework? First of all, what is this green credit program? So we have to understand these two to understand the news article. So let's start with the understanding of the BRSR framework first of all. Okay, so just a brief understanding is required, not too much in depth. So let's start with the meaning of the two. So here, I don't know why it is not working, just give me a second. Okay, so the business responsibility and sustainability reporting, the business responsibility and sustainability reporting framework, this is a mandatory framework. This is a mandatory framework for the ESG disclosure. Under this framework, it is mandated to the companies that they have to do the ESG disclosure. ESG means the environment, social and governance disclosures have to be made, that what steps you have taken for the government, what steps you have taken for the benefit of the society, what steps you have taken for the better governance of your company. Okay, so the disclosures have to be made regarding the ESG, that what steps you have taken in these areas. Okay, so the BRSR framework is a mandatory framework where the ESG disclosures have to be done for the top 100, for the top 1000 listed companies. This is the mandatory framework. Okay, this is the mandatory framework for the top 1000 listed companies in India. Okay, and this is introduced by SEBI. This framework is introduced by SEBI. So basically the BRSR framework, this is the mandatory framework for the top 1000 listed companies, where the listed companies have to make the disclosure regarding their ESG the steps that they have taken, the companies have taken for the environment, for the society, and for the governance. Okay, for the rest, like for the top 1,000 companies, the framework is the mandatory framework, and the rest of the companies, they can also take part in this. They can also disclose that what steps they have taken for the environment, society, and governance. You can understand that if a company is taking more steps for the governance and they are getting higher ratings in the governance category, that means the company is governed very well. It has very good directors that are leading the company to the right direction. So the investors will be very much interested in this kind of company. If the company is doing the more of environmental and social, like the companies, let's say Tata, take the example of Tata, how well the image we have for Tata. If I think about buying a car, the first company that will come in my mind is Tata, because they have done so much of the good activities for the country. They have done the welfare activities for the country, right? So when a company is out there that is working for the society, that is working for the environment, the consumers, the investors, they have a good image for that company, right? So if a company is doing very well in the area of the environment, if they are leading towards the sustainability and they are taking the steps for the environmental benefit, as well as they are taking the steps for the social benefit, so there is a good image of that company in the minds of the investors as well as in the minds of the consumers, and they prefer these kind of companies. Okay, later on I will check that, okay, if the cars of the Tata Motors are good or not. Always whenever the car come into my mind, the Tata Group comes into my mind, the Tata Motors comes into my mind, right? So that is the image that they have created, that they are doing well for the society. So they are linked with the society in a manner. Okay, so BRSR, under this framework, the top 1,000 listed companies, they are mandatorily releasing they are disclosing their ESG work that they have done. Okay, and on the basis of the environment, social, and governance disclosures that they are doing, they are also getting the ratings. Okay, and the investors and the consumers, they are getting attracted to such companies that are working for the environment, society, and they have the good governance. Okay, so this is the idea. So BRSR framework, I hope this is very much clear, that it is mandatory for the top 1,000 listed companies to disclose their ESG, to make the ESG disclosures, and this is introduced by SEBI. Okay, it aims to improve the corporate accountability by requiring the companies to report their sustainability initiatives in a structured manner, that what steps they are taking for the environment, what steps they are taking for the society, what steps they are taking for the governance. Okay, and there are certain principles that have been laid down according to which the disclosures have to be made. So under this BRSR framework, there are 9 principles that I will show you. Okay, now coming to the next point, that is regarding the green credit program. Okay, so green credit program, incentivizing environmental actions. So this is a program of the government under which, first of all, this was notified on 13th October 2023. This is an innovative market-based mechanism designed to incentivize the voluntary actions towards the environment. Okay, so this green credit program, this incentivizes the voluntary environment actions in the diverse sectors. Okay, so basically the companies, the individuals, they are promoted that they should be doing the water conservation and afforestation. So in the initial phase, the green credit program focuses on 2 key activities, that is water conservation and afforestation. Okay, so green credit program, it was first notified on 13th October 2023. It is a innovative market-based mechanism that is designed to incentivize and promote the voluntary environmental actions in terms of water conservation and afforestation. Now, in the green credit program, if you are doing the afforestation in the wasteland, around the river bank, let's say, if you are doing the afforestation, or let's say you are doing some actions for the water conservation and for the reduction in the water wastage, so there are the green credits that are provided to you. Okay, what are these green credits? How they are provided to you? So basically, to obtain the green credits, the individuals and the entities, the companies, they must register their activities through the central government's dedicated app or website. Okay, so there is the website that is dedicated for the green credit program or the app. the administrator will verify the activity, that you have done the activity or not, have you done the water conservation or not, or have you really done the afforestation around the river banks or the wasteland and such. Okay, so whatever activity you are saying that I have done this activity of water conservation or I have done this activity of afforestation, so that activity will be verified through a designated agency. The verification will happen with self-verification for small projects. For the small projects, there are very small projects in a very limited area. So for the small projects, the self-verification will be allowed. Okay. Once verification is completed, the administrator will grant a green credit certificate, which will be allowed to be traded on the green credit platform. Okay. So that's why it is a market-based mechanism, because you can purchase and you can sell the green credits. You can purchase the green credits or you can sell the green credits. Let's say a company like, let's take the example of Tata Group. Let's say the Tata Group are doing a lot of afforestation in the different areas, in the wastelands or in the river banks. The Tata Group is doing a lot of afforestation, as well as they are also taking the water conservation activities. Okay, so they have a lot of green credits that they have got a lot of green credits, and these green credits are available. Now the Tata Group can sell these green credits to some other company, that is, let's XYZ. Now this XYZ is in the business of oil refineries. Okay, oil refineries, or the XYZ company, it is the refinery. Now you know that the refineries, they are usually very polluting, in terms of that they are doing the refinery of the oil, they are refining the oil and such, crude oil and such. So the refineries, they are usually very much polluting for the environment. Now the XYZ itself is not able to do any good for the environment, but the XYZ company can purchase the green credits from the other company. Okay, so this is the idea, that this company will purchase the green credits to show that, okay, this company is also working for the environment. This company is also aware that the environment sustainability is very important for the country and for the whole of the world. So this is the idea, that there is the market, there is the market for the green credits, where the green credits can be purchased or can be sold. So that's why it is a market based mechanism. Okay, it is an innovative market based mechanism. The companies that have more green credits, they can sell the green credits, and the companies that have less green credits, they can buy the green credits. Now, why the green credits is important, why a company will want to have the green credits, that we have to understand. Okay, so the green credits, holding the green credits helps companies demonstrate compliance with the national and the global ESG norms, ESG regulations, and boost the sustainability ranking for a company. Okay, attracting the responsible investors, attracting the investors that are interested in investing in the companies that are working for the environment, that are working for the sustainability. Okay, or eco-conscious customers, or the eco-conscious customers. Let's say there are many customers out there that are purchasing the products from a particular company that are doing something for the environment. Let's say there are new products that are being made, right, that instead of using trees for the paper production, there is something else that is being used for paper production. Or let's say there is some eco-friendly way through which the papers are being produced rather than cutting down the trees. So the eco-conscious customers, they will want to purchase the other kind of paper which is not using the trees. So you can understand that there are customers that have the money and they have the consciousness to go towards the sustainable options for the products. Okay, so this is the idea, that the investors, they will be attracted to such companies that have higher sustainability ranking, and the eco-conscious customers, they will be attracted towards these kind of companies. Okay, so companies that are holding the ESG, the companies that are holding the green credits, it helps companies demonstrate their compliance with the rules and regulations of the environment, sustainability, environment, social and governance norms, as well as they are having a higher sustainability ranking, attracting the investors and attracting the eco-conscious customers. Okay, holding green credits boosts the ESG ratings, it boosts the sustainability ratings as well as the ESG ratings, attracting the ESG focused funds. Okay, some international clients and markets require companies to prove their sustainability efforts. So some countries that are very much taking efforts towards the environment, social and governance norms, that are following very strict rules for the ESG. So these countries, if you want to attract the investors from these countries, or if you want to attract the international clients, you have to follow certain basic guidelines. Okay, so this is the idea that some of the international clients and markets, they require companies to prove their sustainability efforts. So by having the green credits, the companies can do so. Any confusion in the BRSR framework or the GCP? So GCP, this is a very new initiative. This is a market-based initiative that is taken where the companies can hold the green credit by doing the afforestation or by doing the water conservation. They can also buy and sell the green credits. Green credits provide, like if they have more green credits, they will have more of the sustainability rankings and such. Okay, any confusion here? Now, so capital market regulator SEBI has decided to include the disclosure pertaining to the green credit program. So the disclosure, how much green credits you have, a company has. So this disclosure by the listed companies will be done under the BRSR framework now. Okay, so it is said that the green credit program, now it will be included, the disclosures will happen under the BRSR framework, so that under this framework, under this BRSR framework where the ESG disclosures have to happen, under this there will be the disclosure of the green credit program. Okay, so in principle 6 of BRSR, principle 6, I have told you that there are in total 9 principles of BRSR. So under the principle 6, that is, businesses should respect and make efforts to protect and restore the environment. So this is the principle 6 of the BRSR, that the businesses they should respect and make efforts to protect and restore the environment. Under this principle, there are certain norms that have to be followed. There are certain criteria that are present. There are certain criteria that are present that you have followed this principle 6 or you have done this principle 6 or not. Okay, so in principle 6 of BRSR, an additional leadership indicator shall be included, that is seeking disclosure on the green credits in the following format: that how many green credit has been generated or has been procured by a company. Okay, so in the principle 6, under this principle, there are certain criteria, and now the green credits disclosure has become a criteria under the principle 6. So here the company will have to tell that how many green credits have been generated or procured by the listed entity, that is by the company, as well as by the top 10 value chain partners. Now value chain partners, I hope many of you already know that value chain partners. Let's say this is the XYZ company that want to make cloth. Okay, this is the company that want to make cloth. So there is the XYZ company is purchasing cotton. The XYZ company is purchasing machinery. The XYZ company is also purchasing, let's say, like logistic services. It is taking logistic services like the tractor services and such to bring the machinery and the cotton. Now the XYZ company is selling the products to the wholesalers or the distributors. The XYZ company is also connected to the marketing people. Okay, so these are the XYZ company, a company is connected with the value chain partners. They are the upstream partners, the logistic providers, the cotton or the raw material provider, as well as the machinery providers. They are the upstream value chain partners that are providing the required material to the XYZ company. And there are the downstream partners such as the wholesalers, distributors, even the retailers, let's say, and the marketing people. So they are the downstream value chain partners. Okay, so basically the green credits have to be disclosed for the top 10 value chain partners. That means, let's say the listed company is doing very good, like the listed company is having a lot of green credits, it is doing very good for the environment. But what about the companies that you are connected with? Let's say I am a very good human being. Let's just take an example. Let's say that I am a very good human being, but I have friends that are not very good. They are doing theft, or they are like not very respectful. So that showcase that I am not connected with the good people, and I might turn into that direction also by being associated with them. So this is the same idea, that maybe the listed company is doing very much for the environment, but the value chain partners, if they are polluting the environment, if they are not very much doing anything for the environment, so that is not good. That's why it has been said that the listed company has to do the disclosure of the green credits, as well as the listed company has to do the disclosure of the green credits for the top 10 value chain partners of that listed company. Okay, so value chain partners, I hope you have understood. Basically, value chain partners, they are the entities that a company works with directly to run its business. Okay, both upstream are the suppliers of the raw materials or the suppliers, logistic partners, and the downstream means the distributors, marketing channel, and the retailers of wholesalers. They form the extended ecosystem around the company. So it is not only that the company should be having the green credits or should be generating the green credits, should be working for the environment, but the whole ecosystem that is around that company, the whole ecosystem that is working with the company should also be working for the environment. Is this clear? Is this clear? The new requirement will be applicable for BRSR disclosures starting from financial year 2024-25 and onwards. Okay, so this is the idea. Now there are in total 9 principles that I have told you. So principle 1, it talks about ethical, transparent, and accountable conduct and governance. Now these principles you do not have to remember. Just the principle 6 you have to remember. Just this principle is required. Okay, but these principles, they are the BRSR principles that are the principles according to which the company should be functioning for working for the environment, society, and the governance. Okay, so if the company wants to follow, and if the company wants to do the ESG disclosures, if the company wants to work for the environment, society, and governance while making the profits also, so the company should be following these certain 9 principles according and in this BSR principle 6, under this there will be the GCP disclosure that will happen, the green credit disclosure that will happen. Yes, these videos can also be beneficial for the banking examination, because recently the banking, like the IBPS, that is the exam conducting authority, are asking some questions from the finance sector, from the RBI press releases, notifications, but you do not have to go too much in depth. Okay. Now, is this clear? Let's move ahead. So, ESG disclosures, right? Till now, we have discussed about the GCB disclosures. We have discussed about the green credit disclosure. Now, coming to the next point, that is the ESG disclosures for the value chain. What are the ESG disclosures for the value chain? Okay. So, basically, in the principle 6 of BRSR, there are the disclosures on green credits that has to be done, that how many green credits have been generated or procured by the listed company as well as by the top 10 value chain partners. Okay, so that is the idea. This was regarding the green credit. Now coming to the ESG disclosures for the value chain. The ESG disclosures means that for the environment, society, and for the governance, what are the work that a company is doing. So ESG disclosures for the value chain. So disclosures for value chain shall be made by the listed company as per the BRSR core as part of its annual report. So basically these disclosures have to be made for the value chain. Now what is the value chain, like for how much of the value chain the disclosures have to be made. Okay, so for this purpose the value chain shall encompass the upstream and downstream partners of a listed entity individually comprising 2% or more of the listed entities purchases and sales. Let's say that there is a listed company, and it is getting the supplies from a lot of different farmers, a lot of different sellers, a lot of different producers. The company is getting the supply, okay, as well as the company is getting the logistics services from a lot of different partners. So there are multiple partners that this company has. There are multiple upstream and downstream partners that the company has. So it is said that the value chain partners for the ESG disclosures will only be considered those that for this purpose of the ESG disclosures for value chain shall encompass the top upstream and downstream partners of a listed entity that are individually comprising 2% or more of the listed entities purchase and sales by value respectively. Okay, so let's say that a farmer is selling a very little quantity to the company. Let's say the farmer is only providing 0.01% of the the farmer is doing 0.01% of the sale that is of the value of the company. Okay, that is the company is doing the purchase or sale of 1000 rupees. Out of this, let's say only 1% or only 0.1%. So only 1 rupees of the sale the farmer is doing to the company. So this is the idea that out of the total purchase of sale, out of the total purchase or sale that the company has done with the value partners, with the value chain partners, the value chain partners that are providing 2% or more than 2% of the total sale or total purchase, those will be the value chain partners for which the ESG disclosures have to happen. So I hope this is very much clear that out of all the value chain partners, only those for those value chain partners, the ESG disclosures have to happen which are providing 2% or more of the total purchases or sales value for the company, for the listed company. So this is the idea, okay? So for this purpose of the ESG disclosures for the value chain shall encompass the top upstream and downstream partners of a listed entity that are individually providing 2% or more of the total sales or purchase of the listed company in terms of value, okay? However, the listed entity may limit disclosure of value chain to cover 75% of its purchases and sales in terms of value. That means if a company can choose, see, the company can choose to report value chain data only up to 75% of its total purchases and total sales. So it doesn't have to report 100% of its value chain, just the top partners that collectively cover 75%. Let's say that 90% of the value chain partners, they have the share of 2% or more of the total purchase or sales value of the listed company. But it is said that a company can choose to report the value chain data only up to 75% of its total sales or purchases. So it doesn't have to report 100% of its value chain. It doesn't have to report 100% of its value chain or all of the value chain. It doesn't have to report, just the top partners, that are collectively covering 75% only, okay? So this is the idea. Any confusion here? So out of the 90% of the value chain partners that have 2% or more of the total purchase or sales value collectively, or they have the 2% or more of the total purchase or sales individually, in the terms of value. So out of this, only 75%. So out of the 100%, only 75% of the value chain has to be disclosed, okay? So this is the idea, or the disclosures have to be made only for the top 75%. So this is the basic idea, okay? So it doesn't have to report 100% of its value chain, just the top partners that collectively cover 75%. Any confusion here in this? So disclosures for value chain has to happen. The disclosures has to happen for ESG for the value chain, and the value chain is that in the value chain, those are considered that are upstream or downstream partners for the listed company. Individually, they are doing 2% or more of the listed entities purchases and sales by value, okay? So this is the idea. Now, ESG disclosures for the value chain shall be applicable to the top 250 listed entities by market capitalization, the top 250 listed companies. For that, the ESG disclosure need to happen on a voluntary basis from financial year 2025-26, okay? And for the first year of reporting ESG disclosures for value chain, the reporting of the previous year can also happen. That is, if you are doing the reporting for this financial year, for your ESG disclosures for value chain, you can also do the reporting of the previous year numbers. This shall be voluntary, but you can do the disclosure for the previous years. If you have done well, you will be doing the disclosure, but this is on voluntary basis, okay? To illustrate, for value chain, disclosures for financial year 2025-26 has to be done, and with this, the reporting can happen of the previous year data also if the company want, okay? If a listed entity provides ESG disclosures for value chain, then it has to also disclose that how much of the data it has, what percentage of the value chain partners the data has been provided, okay? Then it shall disclose the percentage of total sales and purchase covered by the value chain partners, okay? Let's say only it has provided 80%, okay, or 85%. So the company, if a listed company is providing the ESG disclosures for value chain, it has to also showcase that for what percentage of the value chain partners the data has been shown in terms of total sales and purchase. So this is the idea. Now coming to the next news article, that is the limits for investment in debt and sale of credit default swap by foreign portfolio investor. Okay, so India's central bank kept the investment limits unchanged for the foreign portfolio investors in government and corporate bonds for the fiscal year 2025-26. Okay, so for the limit for FPI investment in government security, there is the FPI, that is foreign portfolio investors. The foreign portfolio investors or the foreign portfolio investment, there is a limit that how much the foreign investors can invest in the government securities, in the state government securities, and in the corporate bonds. So for the government securities, the limit is 6%. For the government securities, the foreign portfolio investment limit is 6%. For the state government securities, the limit is 2%, and for the corporate bonds, the limit is 15%. That is same as the previous year. Okay, and these are the limits for the 2025-26. So I hope this is clear that the limits for FPI investment in government securities, state government securities, and the corporate bonds have been determined, and they are same as the previous year for the 2025-26 also. Okay. Now coming to the next point, that the allocation of incremental changes in government security limit over the two subcategories, general and long term. So basically the government securities, they are considered in two categories, that is general, that usually consist of the government securities that is for the short term or medium term, and the government securities that is for long term. Okay, so the FPI investment in the government securities is divided into general and the long term. Okay, so the allocation of incremental changes. Now let's say that in the current foreign portfolio investment limit for the half year October 2024 to March 2025, these were the limits. Okay, for the government security general, for the government security long term. Okay, now whatever is the increase that has happened in the government security investment limit, that is in the numbers, in the absolute numbers, the increase that has happened, because you can understand that more government securities are being sold. Okay, so if more government securities are being sold, that means 100, if rupee 100 government securities were sold, 6% of that was 6 rupees, right? Now, if in this financial year 200 rupees worth of government securities are being sold, so 6% of this is rupees 12. So in absolute number, even if the percentages of the government securities are same, in number there is the increase that has happened of the government securities in the market, and for the foreign portfolio investors, they can invest in absolute numbers, they can invest more even if the percentages are same. So for the government securities that are released worth rupees 100, the 6% foreign portfolio investment can happen, that is 6 rupees the foreign portfolio investment can happen. Now in this financial year, as more of the government securities will be released, so let's say the 200 rupees worth of government securities are present. This is the outstanding stock of the government securities. So 6% of that, this is the foreign portfolio investment limit for the government securities. So 6% of 200 rupees is 12 rupees. So in absolute terms, the foreign portfolio investors can invest rupees 12. That is in absolute terms. There is the increment that has happened, the allocation of incremental change. There is the increment that has happened in the government security limit in the absolute terms that the foreign portfolio investors can invest. Okay, now this increment that has happened, so the increment that has happened, let's say for the first half of the 2025-26, for the first half of the financial year, the increment is by 22,000 crores. So 11,000 crores is the increase in the general category, and 11,000 crores is the increase in the long term category of the investment. Okay, so the allocation of the incremental change, whatever increase that has happened in the government security limit in terms of absolute terms, so over the two subcategories, general and long term, shall be retained at 50-50% for 2025-26. That means here you can see that there is 11,000 crores of the increase, and here is 11,000 crores of increase. So 22,000 crores, that is the increase in the government security limit in absolute terms. So that is equally divided between the general and the long term category. So this is the basic idea. I hope you are very much clear about it. Okay, any confusion here? So in the percentage terms, government securities, for that the limit is 6%. For the state government securities, the percentage, the FPI limit is 2%. For the corporate bonds, the FPI limit is 15%. But as the outstanding stock of government securities are increasing, as the absolute number, the government securities are increasing. So as a percentage, the absolute value that the FPI can invest, the absolute value that foreign portfolio investors can invest is also increasing. So the increase that is happening in the value of government securities, so the increase that is happening in the value of government securities in the absolute terms, the foreign portfolio investors can invest more, okay? And this increase that is happening in the government securities in the absolute terms that foreign portfolio investors can invest. So this is divided into two categories, that is general and long term, and 50% of the increase is provided for the general foreign portfolio investment, and 50% of the increase is specified for the long term, okay? So this is the idea. Now coming to the state government securities, so the entire increase in limits for state government security in absolute term, again the percentage for the state government security, the FPI limit for the state government securities is 2% of the outstanding stock of the state government securities. But as you know that more of the state government securities will be released in this financial year, so 2% of 100, let's say 100 rupees was the state government securities previously, so 2% of 100 rupees was 2, but now let's say 200 will be the outstanding stock of the state government securities, so 2% of 200 will be 4 rupees, So there is the increment that will happen in the absolute terms. The percentages are same, but in the absolute terms, the increment that is happening in the state government securities for the FPI limit, so this increment is totally provided in the subcategory that is general. That means the long term limit is not increased. In the previous financial year, the limit of the long term was 7,100 crores, and in the coming financial years also, in the coming first half of the financial year and the second half of the financial year, this limit is going to remain the same, okay? Now for the general, in the general category, the whole increase has been shown. The whole increase has been shown in the general category of the entire increase in the limits, the entire increase in the FPI limit for state government securities in the absolute terms has been added in the general subcategory of state government securities. So this is the idea. Any confusion anyone has in this? So coming to the last point for today, if this is clear, let's come to the last point. The aggregate limit of notional amount of credit default swaps that is sold by the foreign portfolio investors shall be 5% of outstanding stock of corporate bonds. So what does this mean? First of all, credit default swap, let's say this is the credit default swap, okay? Let's say there is an investor that wants to buy, that has bought a corporate bond, Corporate bond, this is a financial instrument through which the corporate, that is the company, is raising the fund, through which the corporate or the company is borrowing, okay? So corporate bond, this is a financial instrument through which the corporate or the company is raising the funds, or through which the corporate or the company is borrowing. So let's say the investor has invested in this corporate bond, that means has provided 1 crore rupees to the corporate or the company, that is the borrower. So investor has invested 1 crore rupees, or we can say the investor has lent 1 crore rupees to the company. Now the investor is afraid that what if the company do not return the money to me? What if the company closes down? Because let's say this is a small company. So what if something happens to this company? What if fraud comes out later on? So the investor is very much afraid. So investor, that is the lender in this case, that is the lender or the investor that has invested 1 crore rupees, can purchase the credit default swap, okay? And the foreign portfolio investors, they are selling this credit default swap. So credit default swap says that if the credit that the investor has given, the investor has given this credit to the company. So let's say the company defaults. Let's say the borrower defaults. So in case the borrower defaults, this pressure or this loss will be handled by the seller of the corporate default swap, okay? So the investor, that is the lender, is connecting with the FPI and is purchasing this credit default swap, where the lender will be the investor. It is providing some premiums, it is providing some money to the it is providing some continuous premiums to the foreign portfolio investor that has sold this credit default swap. Okay, so in the case of credit default swap, basically this is the credit default swap, that is an agreement, that is a financial instrument which says that if the borrower defaults, then the seller of the credit default swap, that is in this case foreign portfolio investor, will be liable for the burden of the default and will have to pay to the actual lender of the money, has to pay to the actual investor or the lender of the money. Okay, and why this pressure is being taken by this foreign portfolio investor? Because the investor is doing some regular premium payments to the foreign portfolio investor. Okay, so this you can understand, this is like a insurance, corporate default swap. This is like a insurance. Let's say you have some health issues, so you have taken a insurance. So if anything happens to you, the insurance company will take the burden of handling the whole of the health, whatever amount is there. Okay, so if something happens to a person XYZ, okay, if a health issues actually comes up, so the insurance company will be liable to pay for your for the person's operational cost and such. Okay, so the premiums are being paid by the person. So person is paying the premiums. Similarly, here the lender is paying some premiums to the foreign portfolio investor, and foreign portfolio investor is taking the burden that if the default happens, so foreign portfolio investor will have to pay to the investor. This is the idea. So a derivative, this credit default swap, this is a financial instrument which serves as a form of insurance against the default of an underlying borrower or the debt instrument. So this is the idea. So aggregate limit of the notional amount of credit default swap sold by FPI shall be 5%. So the credit default swap that can be sold by the FPIs, the limit is 5% of the outstanding stock of corporate bonds. So this is the idea. Okay, accordingly an additional limit of, in absolute terms, there is the additional limit of 2,93,612 crores is set out for 2025-26 for the foreign portfolio investors to release the credit default swap. So credit default swap is like a insurance. Like if I buy the insurance, I pay the regular premiums to the insurance company, and if something happens to me, the insurance company is liable to pay for the operation cost or for any hospital cost. The insurance company has to bear it. Similarly, if the lender or the investor is buying this credit default swap from the foreign portfolio investor and the lender is paying regular premiums to this foreign portfolio investor, so the FPI is liable to take into account, or the FPI is liable to take the loss from the default that is done by the corporate if the corporate defaults. Okay, so this is the idea. Any confusion here? Any confusion, anyone? So this is the idea. Aggregate limit of the notional amount of credit default swap sold by FPI shall be 5% of the outstanding stock of corporate bonds, and this is the absolute limit, absolute additional limit that is provided. Okay, so now this is the first question. I hope you will be easily able to answer this question. And before going to the second question, let me show you that if you go to see the Perspective 360-degree series, Justin sir is taking this series. If you have any problem in answer writing, you do not know how to write a good answer or how to improve your answer, so you can see the Perspective 360-degree series that is brought by Justin sir, and that is provided on Monday, Wednesday and Friday at 5 p.m. Okay, so this is the idea, and here the answers are also evaluated. In the comment section you can write your answer of the homework question and that will be evaluated free of cost. Okay, let me see the queries. Absolute limit is the total limit. Okay, it is not the individual limit, it is the total limit. Okay, it is the total limit. It is the total limit. It is the total limits. Okay, for the government securities, for the state government security, for the corporate bonds. Okay, so this is also the additional limit. This is the overall total limit, additional limit. Okay, so this is the first question. I hope you will be easily able to answer this question, and this is the second question. try to answer this question also. And आपकी Finance 360 classes sufficient है phase 2 के लिए, so it is good for the phase 2. Many of the question come from the Finance 360 degree classes, but we are also taking monthly revision sessions to provide you any topics, small topics that are left out, as well as you do have to go through the magazines and the courses that is available to you. Okay, yes, it is aggregate total. Okay. So this is the idea. Thank you everyone. Thank you for joining. Do give the right answer of the homework question. And if there is any confusion, you can ask. Credit default swap, is it clear? Credit default swap, basically, I have told you the idea of the credit default swap. That is a financial instrument through which the lenders, they can get insured that if the borrower is defaulting, the lender is able to get back the whole of the money, because the lender has taken the insurance in the form of credit default swap, and the credit default swap is sold by different entities. FPIs can also sell the credit default swap. The lender is paying some regular premiums to FPI, and the FPI, if the default happens, the FPI will have to take the burden of the default. Okay, so this is it. Thank you everyone. Thank you for joining the session.